Hello, and welcome to another update video on Bitcoin. Yeah, we're here on the daily time frame, and I want to just highlight again let's say the problematic nature of the current price region. I mean, it's not particularly bearish, but it's also not particularly bullish. I think I see this as a very tricky area, and the market is moving through the complexities of various corrective patterns, also on the smaller time frames. We can take a look at the smaller time frame chart in a minute, but overall, we see really very choppy price action up and down. For now, we are holding above the September low. There was a brief break below the September low twice now, but as you can see, the sellers were not strong enough to, let's say, make this a sustained break. So the bulls started to recover, and we're back above the September low, and we're back above the low from the 10th of October. As you probably all know, this was quite a flash crash situation there on the 10th of October. So there is a potential now for the market to recover, because we're still holding. And the recovery scenario would be playing out in the white scenario. We could see the market grind higher towards the blue target zone, specifically the area around 136K, $136,000. That could be an ideal target for, let's say, an all-time high if we get one. But I suppose it could be quite difficult. As you can see, we're only tracking like one more high. And overall, as I explained also in the videos over the last few days, we should be quite close to completing this larger cycle. Historically, the cycle completes in Q4. And what I said already before, if we look at cycles, so if we look at the Bitcoin cycle tracker here that we use, we can see that we're already in that area. I would need to count the days again exactly, but we're sort of in the same range, because the last two cycles, if we measure from the bear market low to the bull market top, they were 1061 and 1067. We might now be somewhere around that 1060, 1070 area. But historically, Bitcoin has never topped in October, okay? But it usually happens in November, December. Now, that doesn't mean it has to be like that. Again, what I can tell you is that the pressure is still up, in my opinion, but the downside risk is high, because you can just see where we came from. I mean, in November 22, it was a very solid bull market for Bitcoin, very good performance, not lower than what we expect, not much higher than what we expect. The reason why many people are disappointed is because the altcoin sector has not really performed well, and people have been very disappointed, or have been left disappointed, right? I mean, that can still change, but I mean, the disappointment is done. The altcoins can still recover, and normally we would see that kind of in November, because let's open the seasonalities. We look at general performance of Bitcoin dominance this is the monthly returns heat map. You can see Bitcoin dominance in October is green as always. Not always, but it usually is up. And also this year is no different. October isn't over yet, but Bitcoin dominance is still pointing towards potentially short-term higher values. It already did what it needed to do in October. We expected a bounce in October. It's done that. The spike that we saw on the Bitcoin dominance chart on the 10th of October, that kind of confirms that, what we typically see. But in November, that's why I wanted to show you this heat map. In November, normally Bitcoin dominance is dropping. Now, again, does it mean it always has to happen? No, like a lot of people expected October to be good. I also, obviously align myself with seasonalities in terms of context, right? So we focus on that as well. However, price action is always key, and we currently cannot see that recovery, that strength that we would normally see in October. But we can still use seasonalities as a guide, right? It's more like getting an idea of what would be normal in a market, not using to predict it. That's a very different mindset. So I just want to show you that typically in November, Bitcoin dominance is starting to decline. And that is kind of in line with what happened before. And that is also when very often in the past, altcoin rallies started. That doesn't mean it has to happen again. So we have to be mindful that we're close to a top. Maybe we've topped already, but if we've topped, yeah, maybe if the cycle is over, there is currently no evidence for it. It's very, very important to understand. I explained in previous updates what constitutes the beginning of a bear market from a technical point of view, from an Elliott Wave point of view, while also considering other metrics, indicators, and trend filters, like, for example, moving averages. We're currently holding way above the 55-week exponential moving average. It's currently at around $98,500. And this level is very, very important because it has been a reliable trend filter and supported the bull market in the last couple of years. As you can see, we spent quite a lot of time above this 55-week EMA over the last couple of years, and we're still holding above it. Should we start to get, let's say, candle closes below, for example, yeah, I'm talking about weekly candle closes below, well, then it's starting to get a bit tricky, right? Because that would be more bearish than what we have seen so far in this cycle. But I explained in yesterday's video update what kind of might confirm that we're in a bear market. My answer at the moment is I can't promise that we're not yet in the bear market, but there is formally no confirmation. The only small confirmation, the only small warning that we have is there is some ongoing weakness here. We can't really get away from previous swing lows, yeah. And we have a small 5-wave move down. Now, from an Elliott Wave point of view, a 5-wave decline is a warning. It's an indication that, maybe we have topped already, a 5-wave decline. But a 5-wave decline itself is not a confirmation. It is just a warning and can be integrated and seen as a larger ABC structure where the C wave is a 5-wave move. And that itself gives it this 3-wave sideways correction appearance. And a sideways correction in an ABC structure, again, it's not a downtrend really, it's a correction, it's a corrective pullback, more like a sideways consolidation pattern, and something that we usually see in fourth waves. So I'm still leaning to the idea of another high. I told you where things could be going, but what really matters for this week and the coming sessions is this resistance area between $113,460 and $121,752. So this would be a resistance area to watch. I mentioned that already over the last few days. We tested it yesterday. The price came back. So let's take a look at the shorter time frame. What happened there? We have seen from the swing low here around the 17th of October a 5-wave move up. And that is a first indication the market might want to go higher. But it's not perfect, and it would likely be classed a so-called diagonal structure. So diagonal, expanding diagonal, messy structure cannot be trusted. Typically, when 5 waves complete in a diagonal structure, the pullback is sharp. Happened. But it looks a bit like a 5-wave move down. That prompted me to add the blue scenario to the chart, which allows for another low. Yeah, it would simply be an extension. Yeah, this wave 4 that I just showed you on the larger time frame might simply be extended. We could get one more low. It would likely take us to the 55-week exponential moving average around 98.5K. But to keep the blue scenario alive, the market needs to give us a rejection from this micro resistance area between $109,500 and $112,485. This would be micro resistance for the blue count. I don't clearly prefer blue, but it's also likely, right? So basically, to open the door to a larger recovery rally, which could in the first instance take us to 117,600 and then maybe to 122K in the white scenario, these are the two different ones that we're tracking, we need a break above initial micro resistance. So to make it very clear, in all scenarios, a bounce was likely because in the orange scenario, a larger B wave. In the white scenario, a recovery rally that might eventually take us to all-time highs. And in the blue scenario, after an initial 5-wave decline, a move into resistance. So that happened. Now, as that we are in the resistance area, this is a tricky spot. That's what I said in the beginning. We need to pay close attention to these Fibonacci levels, 110,370, 111,240, 112,485. If we get any 5-wave decline from this region, it might be a strong indication that we have a meaningful top. for example in wave B, which could then result in a C wave decline and take us towards 98.5K. But for now, there is only a 3-wave decline from the intraday high. This does keep the door open higher. However, the momentum is really, really weak. So I'm not convinced really that we are going higher in the orange or white scenarios. But I think, as I said, it's a tricky area where we just have to monitor price action very, very closely to understand the change in dynamics when they happen. For now, the short-term pressure is up, but I'd say any 5-wave decline from here and then also a break below yesterday's swing low would be a good indication we're aiming for 98.5K. For now, the short-term momentum is up and the bulls are trying. And if we break above 112,485, the next target above is 117,611. That should give you a good idea of what's currently going on there with Bitcoin. I keep you updated, of course. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks so much. Bye-bye.